Okay, thank you for participating today class. Now I am going to start my lecture about lease property. Lease property actually a big size of item we cannot personally buy at a time. So we have to need to use, but we cannot buy. In this situation, we just try to agreement with lessor and at a interval or regular we have to pay for a installment. This is the lease. Lease actually is the agreement between the two parties. There are some criteria and there are some types. So actually lease two types and there are some criteria, two types of lease. We gradually discuss about this. Now I am going through some rules and regulation about the lease. Actually, they are clearly mentioned in IFRS 16 about the lease property. Okay, there are clear definition about the IFRS 16 is the international financial reporting standard that address the accounting for lease and became effective on 1st January 2019. That's been already started from 2019 about the lease property. And lease property, this agreement or this related rules and procedure already enrollment under IFRS 16 in 2019. The primary goal of IFRS 16 is to bring greater transparency to lease accounting by requiring leases to recognize most lease on their balance sheet. Actually, you have to first determine leasee and lessor. Leasee means user and lessor means owner. One party give lease to other parties. Those party who are want to use this party is called leases, and those party are provided. This party is called lessor. Lessor and leasee. There are two parties. Actually, lease, there are two types of lease, financing lease and operating lease. We have discussed, or we will discuss gradually some basic concept I am going to discuss here. Lease accounting right of use, that means ROU, asset and lease liability. Leases are required to recognize the right of use asset and corresponding lease liability for the most leases, except for short-term lease then less than 12 months, and the lease of low value asset. That's been there clearly mentioned. Leases, they hold the position of owner on the basis of the user, and lessor have to give the right to use and freely used by the leased asset by the leasee. So you have to consider first lessor. Lessor means owner and leasee means user. So lessor give the right to use the leased property to the leasee, this agreement. But leased property not less than 12 months. Lease property have to more than 12 months. Okay. So if the lease are cover the short period means minimum 1 year, maximum 5 years. This is the operating lease. And another more than 5 years, the financing lease. Say for example, you want to buy a bus but the price of bus maybe 20 million lakh, 20 million taka or 30 million taka. But for a person, it is impossible to buy at a time to payment. So in this situation, he may contract or agreement against a lease. Here are two parties, one party is lessor, another party leasing. Okay. So in this case, lessor must be give the right use of the asset freely without without some condition. Okay. So this is actually fact. Then measurement, right of use asset initially measure at the present value of lease payment. You have to measurement or you have to consider the price, initial price, and adjusted for initial direct cost and any lease incentive. Initial direct cost means when you are involved with the lease agreement. So in this time, what's the amount you want to expense again at a lease purpose? This lease purpose expense is called initial direct cost. Lease liability measure at the present value of future lease payment discounted using the interest rate implicit in their lease or leases incremental borrowing rate if not available. So lease liability means leases are liable to pay the total amount. So in this case, how many installment or how many single amount you have to pay regular basis or regular ways, you have to consider by a specific rate. This rate may be implicit, may be incremental borrowing rate. So which rate are less, you have to consider a less amount between the two option. Number one, implicit lease and leases incremental borrowing rate. Okay, you have to consider the interest. This interest, if there are mentioned true rate, one implicit rate, another leases incremental borrowing rate. Between two rate, you have to consider comparatively less rate. Okay, this is the actual condition. Now I am going to our second slide. What is lease? The very basic concept I mentioned. A lease is a contractual agreement calling for the lease's user. Those who use the property or asset, the user is the leases to pay the lessor. Lessor is the owner. Lessor receive the money regular basis for the use of an asset. Property, building, and vehicles are the common assets that are leased. Generally, we agreement property types, building types, and vehicle types properties. Industrial or business equipment is also leased. Other asset or properties that is related with industrial or related with business equipment is also you can do the lease. So this is the very basic concept of lease. Okay, there are two types of lease. Number one, finance lease. Number two, operating lease. Operating lease basically the short period of time hold, and finance lease holding times comparatively more than operating lease. Maybe minimum 5 years, maximum depend on asset or agreement. And operating lease, the terms or time period, minimum minimum 12 month or 1 year, maximum 5 year. Operating lease, time dispensation or time duration. Okay, this is the basic concept gradually differentiate between the both types of lease, some condition or some important phenomena has control of the lease asset passed to leases. Of course, you have to give the lease, you have to give the right to use the lease asset. So finance lease, yes, but operating lease, no, because operating lease is a short period. Lease type, financing approach and operating approach. Balance sheet, right of use asset and lease liability both are shows in balance sheet. Operating lease are also same. Both types of item or transaction you have to display on the balance sheet. Income statement, interest expense, amortization expense, we have to show the income statement, but only leases expense you have to show in income statement. Pattern of expense, front loaded and straight line. Cash flow statement, operating cash paid for interest, financing cash paid for principal. Cash flow statement, thus cash payment you have to consider, finance lease. Operating cash paid for lease payment, only operating purpose, no financing purpose. Financing purpose also bear by finance related activities. The operating lease you have to consider only for operating purpose in cash flow statement. Okay. So you know the cash flow statement. What do you mean by cash flow statement? Basically, cash flow statement is a statement where our ending cash balance are shows or how many cash generated in accounting period that you have to determine and shows the balance. This balance is end of cash flow statement. This is the cash flow statement and its balance. There are another option, some basic similarities and dissimilarities about ledger and lease is mentioned by the slide. At first box, there are mention about the lease contract. Contract is is an agreement between two or more parties that creates enforceable right and obligation. Enforceable right and obligation. Another, lessor and leasee. Lessor means owner, or leases mean user. Right to use the used asset. Used asset you have to give the right to use from the lessor perspective, and the lessor perspective are some point are discussed here. Obligation to transfer the right to use the use asset. Use asset ownership transfer, you have to transfer to use the right. And leases, right to use the use asset, right of use asset, right of use asset just. Right to receive lease payment. Lease payment you have to receive regular basis or regular interval. Obligation to make lease payment, lease liability. Right to rental in the UA. Obligation to return the UA. UA means used asset. This is the some similarities and the similarities about the lease. This is the basic criteria. The criteria for classification lease as capital lease. Capital lease means finance lease. Finance lease and its some criteria. At first, bargaining purchase option. This is the very crucial point or first condition to be completely a lease agreement. So before agreement, anyone you mistake, you cannot tell or you cannot say the lease agreement or lease contract. Okay. So to be a complete lease agreement, you have to follow the four criteria or four condition. Without anyone, you cannot contract or you cannot deal the lease agreement according to the rules procedure according to IFRS 16. Also about lease, IAS and 37, there are clearly mentioned. Don't worry, you try to read the IAS 37 and IFRS 16. There are clearly mentioned or detail elaborate the lease agreement, how, when, how, why we contact the lease agreement. Okay. So at first option, bargaining purchase option. Bargaining purchase option means you have to beat, or you have to bargain to less to get the asset by less price. Okay. Lazy and leisure, they are the may maintain the option, bargaining purchase option. Okay. One party is asks more and another party is asks the low price. Okay. So both are you have to negotiate it about this. Then you have to settle this amount or these issues. Then you will go to the next step to complete the lease agreement. Another is a present value of lease payment. Present value of lease payment. Lease payment, you have to consider the present market condition or present value. The what amount are run in the present market, the asset. You have to contract this present value basis. Okay. So without this present value, you cannot go further process to continue the lease agreement. Another option is the alternative use. You have to consider alternative because sometimes a lease agreement maybe hold or maybe discontinue in a different way. You have to take consideration about the alternative use. Okay. Another, transfer of ownership. In the finance lease or capital lease, you have to transfer the ownership after the end of the lease period. Okay. Say for example, you give a asset to the leasee on a complete lease agreement for 10 years. After 10 years, you have to surrender or you have to transfer the ownership of the asset. This is the option. This is the uh, mandatory for capital lease, but in operating lease, this is not mandatory. Okay. So, suppose to you think that the useful life of the asset is 10 years, but you have to continue minimum 75%, then you can transfer the ownership. 75% means minimum 7.5 years. You have to continue the lease procedure or lease contract. Then you will transfer the ownership. Okay. So you have to maintain the 75% of the lease term. That's mean the useful life of asset 10 years, you have to continue the lease minimum 75%. That's means 7.5 years. This is the another important condition to be complete a lease agreement. Now I'm going to another slide. Lease as per IFRS 16. IFRS 16 specifies how IFRS reported will recognize, measure, present, and disclose lease. Measurement, present condition or scenario, and disclosure about the lease are the clearly mentioned according to IFRS 16. The standard provides a single lease accounting model requiring leases to recognize the asset debt liabilities for all leases unless the lease term is 12 months or less or the underlying the asset has a low value. And third, Lessor continue to classify the lease as operating or finance with IFRS 16 approaches to lessor accounting is sustainability unchanged from its predecessor IFRS 617. That's mean there are clearly mentioned about the operating and financing lease, IAS 17 and IFRS 16. I think it clearly say to the rules and procedure what are mentioned there. Main purpose of lease: eliminate off balance sheet finance. Eliminate off balance sheet finance. You have to eliminate off balance sheet financing. Off balance sheet means some item in finance you have to only display on notes, not show or not reported in the balance sheet or income statement. Okay, just you show on your notes. Say for example, the those assets are lawsuit in court. If any asset under case or under a legal complaint by the court, these types of assets you have to show only. These types of transaction is called off balance sheet item. These types of balance sheet item you have to show on the notes, no report in the main income statement and the main balance sheet. Okay, this is the another. If the lease was classified as operating, then the leases did not show neither asset nor liabilities in their balance sheet. If the operating lease, no need shows the asset and liabilities on the balance sheet. Just lease payment as expense in profit or loss. Just you have considered an expense and you have to treatment under the profit and loss or income statement. Then how the some operating lease were non-cancelable and therefore they represent the liabilities for the leases. The liability was hidden from the reader of the financial statement. And final, new IFRS 6 to remove the discrepancy and puts the most leases on the balance sheet. Okay, so remove the discrepancy. That means small things or small types of expense or not insignificant types of transaction. Okay, you have to remove such types of expense, but put the most lease on the balance sheet. But you have to most the balance sheet. Okay, this is the sum or main purpose of the uh, sales in lease. Another point is how to identify the lease as per IFRS 16, a practical approach. There are mentioned clear if you want to rent a space, but you have to must specifically you have to record or report it how many space you want to rent. 5 square kilometer, 200 square kilometer, or 500 square kilometer. Which part you have to clearly mention in your lease agreement. Other else, the lease agreement cannot completely fulfill the criteria or condition. This is the concept are actually mentioned in this para. So I think you try to read it carefully and you also able to better understanding about this. This is the another how to identify a lease as per IFRS 16, the practical approach. Thus, I try to show a simple math. There are some topics, some terms or conditions clearly mentioned. I discuss in the meantime. you will get a maximum understanding how we can practically solve the this property. So now I am going to next slide. This is the another important things to be complete the lease agreement. There are clearly mentioned that about under the IFRS 16 there are no fixed 75% run. Only 75% or more than 75% you have to hold or you have to continue the lease agreement, not less than 75%. 75% is the threshold. Okay. So there are clearly example asset useful life lease term percentage meets 75% guideline. Say for example 8 years you have to continue the lease minimum 7 years. Then 87.5%. Yes, this is the okay for lease. Another 10 years the asset useful life, and if you continue the lease agreement the asset by 6 years, then 60%, no cover 75%. So it is not a lease agreement. It not will be the lease agreement. Okay. Then asset is the 12 years. You lease term or you have to continue minimum 9 years. Then it will be 75%. Okay. This is the under consideration for lease according to IFRS 16. You can deal the lease agreement by this percentage. Okay, this is okay, and this is the condition how many year you have to continue the lease agreement, the clearly mention or clearly try to show according to you. This is the practically mathematical problems. Just I try to some discuss here, but there is no chance to completely solve the math because we try to design a question, the MCQ quality question. So I think no need to solve the big math. Okay, you have to try to understand the technical point about the big math. I think. Okay. So there are a lease agreement math. I try to